Hey everyone, it is tough to talk about this stuff, but I have to because honestly, I have messed up so much in my investing journey. I am not some guru, just a regular guy who, like many of you, probably wanted to make some quick money and ended up learning some very expensive lessons today. I want to pull back the curtain on some of my biggest screw-ups, especially how easily I was swayed by all the noise, the promises of easy returns, and how that led me to some really deep financial holes. We are going to talk about how the market at times felt like it was being manipulated, and how that played right into my naive belief that I could just ride the wave without understanding the currents. So, when I first started out, I was really young, in my early 20s, and had this burning desire to get rich fast. My background was pretty normal, no fancy finance education, just a regular guy with some savings from working hard. I saw everyone around me talking about certain stocks, certain opportunities, and it felt like if I did not jump in, I would miss out big time. This fear of missing out, or FOMO as they call it, was probably my biggest enemy. I would hear a tip or read something online and just dive in headfirst without doing any real research, without understanding what I was actually buying. It was all about chasing the next hot thing. I remember one time there was this stock everyone was buzzing about, promising incredible returns in a short period. I poured a significant chunk of my savings into it, convinced it was my ticket to early retirement. I did not ask any critical questions. I did not look at the company's financials. I just followed the crowd blindly. Of course, it crashed and I lost a huge amount of money that had taken me years to save. It was a painful lesson that was just one of many. Though I got caught up in short-term trading, constantly buying and selling, trying to time the market. Every time a stock went up a little, I would get excited, thinking I was a genius. Every time it dipped, I would panic sell, locking in losses. This emotional roller coaster was exhausting, and it chipped away at my capital slowly but surely. I also fell for some outright scams, things that looked legitimate on the surface, but were just designed to take people's money. The promises were always too good to be true, but my greed and inexperience blinded me. They talked about guaranteed high returns, zero risk, all the red flags that I now know to look out for. Back then, I just saw the potential profit, not the gaping hole where my money would disappear. Another huge mistake was not understanding risk management. I would put too much money into a single investment, essentially betting the farm on one idea. This is called over-leveraging or concentrating your portfolio, and it is incredibly dangerous. When that one investment went south, as it often did, the impact on my overall financial situation was devastating. I learned the hard way that diversification is not just a fancy word, it is a shield against total financial ruin. You spread your investments around, so if one fails, it does not take everything else down with it. I also struggled with emotional trading, letting fear and greed dictate my decisions. I would buy high out of excitement and sell low out of fear, completely ignoring any logical analysis. It was a vicious cycle that kept me from ever truly getting ahead. After losing pretty much all the savings I had worked so hard for, I hit rock bottom. It was a really dark time. I felt stupid, embarrassed, and completely lost. But that experience, as painful as it was also a wake-up call. I realized I could not keep going like this. I had to change my approach drastically. So I stopped chasing quick riches and started focusing on learning. I devoured books, articles, and reputable financial advice. I learned about proper financial planning, understanding market cycles, the importance of long-term investing, and building a diversified portfolio. I realized that true wealth is not built overnight. It is built steadily, patiently, with a focus on sound principles, not speculative bets. My mindset completely shifted. I went from wanting to get rich fast to wanting to build a secure and stable financial future. I started with the basics, building an emergency fund, paying off debt, and then slowly, cautiously began to invest again. But this time with a completely different strategy. I focused on low-cost index funds, diversified ETFs, and solid dividend-paying companies. I learned to control my emotions, to not check my portfolio every 5 minutes, and to understand that market fluctuations are normal, not a reason to panic. It was a long, slow climb back, but it was worth it. I am not rich by any means, but I am financially stable and I have peace of mind, something I never had when I was constantly chasing the next big thing. Now, my goal is to share these hard-won lessons with you all, especially those of you in your 20s and 30s who might be making the same mistakes I did. I want to be that voice that tells you to slow down, to learn the ropes, and to avoid the traps that are out there. One of the biggest traps I see people falling into, and one I certainly fell into, is believing that the market is always rational, or that someone out there has your best interests at heart. The truth is, markets can be manipulated, and there are powerful players who operate on information that you and I do not have. I have seen it firsthand how certain narratives can push prices up or down, creating artificial volatility. It is like being in a boxing ring where you are fighting blindfolded, and your opponent can see everything. For example, think about how political rhetoric can move markets. Sometimes it feels like certain statements or events are designed to create a specific market reaction to benefit a select few. The people on Wall Street, the big players, often operate in a world completely separate from ours. They are not always focused on the fundamentals of a company or the true health of the economy. They are often playing a different game, a game of influence and speculation. They might not understand the real-world implications of certain events, like geopolitical tensions or supply chain disruptions, because they are so far removed from the actual production of goods and services. It reminds me of a story I heard about how a market analyst once admitted he had never actually visited a mine, despite giving advice on mining stocks. It sounds crazy, right? But it highlights this disconnect. How can you truly understand an industry or an investment if you have never seen how it works, if you have never been to the source? When I started learning about investing, I realized I had to get closer to the ground to understand the real world behind the numbers. I realized that chasing narratives or believing in the pronouncements of powerful figures was a recipe for disaster if I did not have my own understanding of the underlying realities. And speaking of real-world realities, we are currently facing some huge economic challenges that go far beyond what most people realize. We are seeing disruptions to global supply chains, massive price increases in essential goods, and a growing instability that is making traditional investing strategies even riskier. It is not just about a stock market crash, though I do think that is a real possibility at some point. It is about a fundamental shift in how the world economy operates. Things that used to be stable, like the free flow of goods and resources, are no longer guaranteed, for instance. The global energy situation is a mess. We are seeing fuel prices skyrocket, and that has a ripple effect on everything. When diesel prices go up, the cost of transporting food, goods, and materials goes up. This means higher prices at the grocery store, higher manufacturing costs, and ultimately a squeeze on everyone's budget. It is a war tax in a way. Even if you are not directly involved in a conflict, it is not just our country either. People all over the world, in India, China, Korea, Japan, everywhere, are feeling the pinch. This is bigger than anything we have seen before, and it is going to continue to affect our daily lives in ways we might not even realize yet. We need to understand that a civilization that cannot secure its own essential resources, like energy and food, is a civilization at risk. This is why you are going to hear a lot more about resource sovereignty in the coming years. It is about countries ensuring they have access to the critical materials they need to survive and thrive without being dependent on others. For investors, this means a shift in strategy we used to talk about just-in-time logistics, where companies would keep minimal inventory, relying on efficient supply chains to get what they needed exactly when they needed it. Now, we are moving towards just-in-case logistics. This means stockpiling essential goods, minerals, rare earths, even things like fertilizer and fuel. These things are becoming as vital as stockpiling oil was after the crises of the 1970s. Many people do not realize it, but countries like China have built up impressive strategic reserves of essential commodities, and that puts them in a much stronger position right now compared to others. This kind of foresight is what we all need to start thinking about, both as individuals and as a society. For example, in our own country, we have serious vulnerabilities. California, for instance, imports a massive amount of foreign oil and has very limited pipeline infrastructure to get fuel where it needs to go. If there is a disruption, they are in trouble. Our farmers are also struggling with the soaring costs of diesel and fertilizer. Over 70% of them say they cannot even afford to buy fertilizer. We have seen fuel prices jump by over 50% in just a few weeks. These are not minor issues, these are foundational problems that affect everything from the food on our tables to the cost of our heating bills. Another thing I have learned is that you cannot print energy or materials. Even if you can print money, governments can try to stimulate the economy by printing more currency, but that does not create more diesel to fuel trucks, or more fertilizer to grow crops, or more natural gas to power factories. These are real physical resources, and their scarcity has real consequences. We also have a significant challenge with rare earths. We have plenty of them in North America, but we lack the refining capacity to process them ourselves. This means we are dependent on other countries for these critical materials, which are essential for everything from electronics to renewable energy technologies. We need to invest in building up our own refining capabilities, our own infrastructure, so we are not so vulnerable. So where should we be putting our money, our efforts, our focus? Not into endless, unwinnable conflicts. That is for sure. It seems almost foolish to pour vast resources into military campaigns that only destabilize the global economy and bring the world to its knees financially. We should be investing in sustainable energy, in refining our own resources, in strengthening our supply chains, in supporting our farmers. We need to look at our transportation networks, our water infrastructure, our hydroelectric power potential. How can we power our lives and industries in ways that are less reliant on fossil fuels and more resilient to disruption? These are the kinds of questions we should be asking, and these are the areas where we should be directing our resources. People often ask me, how long can this go on, this period of instability and rising prices? Honestly, I do not have a crystal ball. No one does. But I do think we are heading towards a point where something has to give. Either we face a massive financial collapse, perhaps even worse than what we saw in 2008, or we simply exhaust ourselves trying to maintain a status quo that is no longer sustainable. It is a race against time, and I am not sure which outcome will arrive first. And then there is the elephant in the room, the de-dollarization trend. More and more countries are starting to do business in currencies other than the US dollar. We are seeing nations like Russia selling off gold to increase their liquidity and others like Japan potentially looking to dump large numbers of our treasuries. This is a huge shift and it has massive implications for the global financial system. The yuan is increasingly being seen as an alternative, and I would not be surprised if at some point it becomes more directly linked to gold. I think gold in general is going to become even more central to the global financial system. It has always been a store of value, a safe haven, and in times of instability, its importance only grows. In my opinion, gold is already effectively functioning as a reserve currency, even if it is not officially recognized as such. So, what does all this mean for us as individual investors, especially young people trying to navigate this complex world? It means we need to be smart, resilient, and adaptable. We need to focus on building a strong financial foundation, on understanding the big picture, and on making informed decisions, rather than chasing fleeting trends or listening to unreliable sources. It means focusing on real assets, on diversification, and on protecting our wealth from inflation and economic instability. It means not being afraid to admit when we are wrong, to learn from our mistakes, and to constantly educate ourselves. It is a challenging time, no doubt, but with the right approach, we can navigate these waters and build a more secure financial future for ourselves. Let us learn from my past blunders and together try to avoid making the same mistakes.